With climbing home prices, stimulus still up in the air, and mortgage delinquency still around record highs, we might be looking at another housing crash in the new year. In this video, we're going to look at the housing market overall and what it will most likely look like in the new year. Before we begin, don't forget to like and subscribe to see more videos. 2020 has been a wild ride for stocks and the housing market. Everything seemed to be going great in the beginning of the year, with the economy firing on all cylinders and stocks reaching record highs. As we all know, though, the pandemic swept through, lockdowns began, and we saw a huge crash. After the stimulus was passed, mortgage forbearance was implemented, and everything started to settle. We are back at record highs now for stocks, and home prices continue to rise. So what is next year going to look like in terms of the housing market? Right now, we are at a possible inflection point in the housing market, where we are going to see record low interest rates, but mortgage applications are beginning to slow down. Home prices, on the other hand, continue to rise because mortgage rates are so low. People that didn't lose their jobs are now looking to buy homes, since interest rates are so low. Home prices and interest rates have an opposite correlation. If interest rates are low, home prices tend to be higher, and if interest rates are higher, home prices tend to be lower. We are also seeing a mass migration out of cities as jobs are becoming more remote, and many people aren't willing to take the risk of living in a city anymore. As this begins to happen, we might start to see properties in major cities decrease. As more areas surrounding the cities, those home prices will begin to increase. However, we might start to see a softening in multifamily real estate, as the eviction freeze might be extended if we go into another national lockdown. This means that landlords could not evict their tenants for not paying rent, and this has been going on for almost a year now, and could be extended further. Landlords could request forbearance on their loans, which essentially means that they put a pause on their mortgage payments and could work out a payment plan in the future, but this is still also coming to an end, and that money still needs to be repaid. Also, taxes on properties are still due, and if the property isn't producing any income, then the landlord can't pay all the other expenses associated with the property other than the mortgage. If the eviction freeze isn't extended, we're going to see a mass eviction crisis take place, and 6 million households could face evictions come January 1st. Single-family homes, however, are most likely going to stay pretty stable in 2021, as people who didn't lose their jobs are the ones looking to buy these homes. A lot of these homes are being sold are mostly people that could work remotely and really didn't have any worry about being laid off, because most big companies have gotten through the lockdowns relatively unscathed. It was small businesses and low-wage workers that couldn't open or go to their jobs that really got hurt. Black Knight recently released an update on delinquency rates, and it showed that the number of seriously delinquent mortgage loans, which means 90 days or more past due, declined by 64,000 month over month to 2.259 million to 2,259,000 in October. However, this is more than 5 times higher than pre-pandemic levels. Despite 5 straight months of improvement, there were almost twice as many delinquencies as there were at the beginning of the year. In total, more than 3.4 million homeowners are behind on their mortgage payment. The national delinquency rate fell to its lowest level since March, down more than 6% last month. Month over month, there were approximately 105,000 fewer past due mortgages in October than September. However, mortgage forbearance and banks willing to work with homeowners has kept foreclosure activity at historic lows. October saw the start of foreclosures plunge 90% year over year to 4,700 at 178,000. Black Knight also noted that its delinquency figures count all homeowners who have missed payments, whether they are in forbearance or not. So are we going to see a housing crash in 2021, since all these people are still delinquent on their loans? Most likely not. Many homeowners took forbearance even if they didn't necessarily need it, because it would push those payments to the end of their loan. With the mortgage rate so low, why not extend your mortgage as much as possible, because it is basically free money as inflation eats away at the debt. Once the forbearance period is up, a lot of these people will continue making their payments like they always have. Also, with rates so low, housing prices will most likely continue to rise. However, we might see a split in the housing market. Single families will keep doing well, but multi-families might start to trend downwards, as eviction freezes might be extended. We will also continue to see some markets do great, especially suburban areas and places outside major cities, especially if lockdowns continue and remote work becomes widely accepted now. Cheap rates will keep the housing market up, but eventually those rates will have to begin to rise. This will most likely not happen in 2021 though, and the housing market will stay stable. It is going to be interesting to see what happens when these interest rates start to climb back up. Will people start becoming underwater on their homes as the prices fall because rates start to rise? This might cause an issue though, as people are putting so little down nowadays because rates are so low and the actual home prices are so high. A lot of people are putting down small down payments, then refinancing later on as the price of their home rises. Then they put the normal 20% back into their home. This only works though if prices of those homes go up. This is what we saw in 2008, where people were putting literally no money down and really couldn't afford the payments for the home. It was okay though because home prices were on the rise, and they refinanced and pulled out all their built-up equity to actually afford the home. This all comes crashing down, however, when prices are stagnant or even worse, start dropping. However, I don't see it exactly the same, as banks are tightening their lending requirements and are only loaning out money to people that are qualified, unlike in 2008. This pandemic has created a huge transfer of wealth. People that could afford to invest came out way ahead because of the pandemic, and those that were struggling already got hurt the most. People that can afford to buy a home are now taking advantage of super cheap rates, and those that can't are missing out, just like we saw at the bottom of the 2008 recession. I believe though in 2021, the housing market will continue to rise, but we might start to see some downturns in specific markets, such as multifamily and densely populated areas, as evictions will speed up or freeze again, and people are moving away from cities. And with that being said, as always, thanks for watching, and if you enjoyed the video, like and subscribe to see more.